let's take a look at some of the stocks on the move. I'm Paul Sweeney alongside Norah Mulinda. We've been talking a lot about Tesla. Delivery numbers came in weaker than expected. Let's get the broad overview of what's happening at our good friends at Tesla. The stock's down about 24% year to date. We turn to Pierre Ferragu, head of global technology infrastructure at New Street Research. Pierre, thanks so much for joining us here. How do you think about these Tesla numbers? What does it mean for the near and intermediate term story at Tesla?
Yes, as you say, there is a bit of a positive surprise, like people tracking very precisely deliveries in various markets were expecting slightly lower numbers. The surprise comes from the US. The US is a place where it's the most difficult to track the number of Tesla being delivered, and the US beat expectations. So that's a Model Y coming in, doing actually quite well. That's good. But then at the end of the day, you have to remember the big picture. We are down 13% year on year. So we are facing a situation where Tesla is struggling to sell cars. Gross margin is in the low teens. To me, Tesla facing good demand should be able to defend like mid 20s gross margin. So we are facing like a core business, an auto business that is really at a very low point that is struggling. And so what's the difficulty? You have like one structural difficulty that we understand relatively well. It's that with their current product, Tesla has kind of saturated its opportunity. Tesla needs lower price points to keep growing. And that's in the plan, they're working on it. And then you have a number of other issues. Electric cars are less fashionable than they were a couple of years ago. The Tesla brand has suffered, particularly in Europe, where numbers are down like almost 40% year on year. And so it's difficult to quantify, but it is a significant headwind as well. And overall, the economy is not the best you can imagine for auto demand.
Yeah, I mean, when we look at the Mag 7 stocks, we see Tesla as the primary laggard this year, down about 23%. And of course, we know that investors have really been vying for Musk's attention as he's been really politically involved. So as we're seeing these numbers come through, what do things look like moving forward? Are these numbers a massive impact, or are the Tesla loyalists still out there? And is there some further positivity to come?
The Tesla stock has been on a roller coaster. It's like a very low performer this year, but it was like a clear outperformer last year. And as you say, it's following the political career, if I may say, of the CEO Elon Musk, this has created this situation. Now, if you look at the stock, since April 1st, what you see is that what tends to really move the stock is actually the news flow around how the company is now focused on deploying fleets of robotaxis. They've just started that in a couple of weeks ago, like late last month. And I think that's going to be the primary driver of the stock going forward.
Right.
Of course, there is a lot of uncertainty on how fast Tesla is going to be able to deploy a robotaxi or even make profits, like generate the profits out of a robotaxi fleet. But the size of the price is so gigantic and so much more than the auto business that this is probably what drives the stock going forward.
Pierre, thank you so much for joining us. Always appreciate getting your thoughts there. Pierre Ferragu, he's head of global technology infrastructure at New Street Research.